Hello and welcome to the Shipper Update. I'm Anthony Smith, Chief Economist here at FreightWaves, and I'm back once again with Thomas Watson. And Thomas is going to be joining me talking about, we're going to go over some of the upcoming releases for the week. And one of the big ones that we're going to be starting off with is going to be the ISM PMI, which is going to be one that's going to be watched closely. And it's like just everything happened while I was gone, Thomas. So it was going to be a slow week in economic releases, but GDP was going to come out. But we did see a big GDP shift, downward movement of 1.4%, which we're going to jump into, but it was well covered here by FreightWaves and all of our colleagues here. But we're going to talk about keeping moving forward because it always keeps moving forward. The freight always keeps going. ISM PMI is going to get updated in this upcoming week. It's sitting at 57.1 percentage points. If you're not up to date on this index, it reads as anything above 50 is indicative of expansion, while anything below 50 is indicative of contraction as it pertains to manufacturing. Manufacturing being one of those areas that's really been a pretty stronghold overall for the overall economy as we've been moving on throughout these past few months. We see it in flatbed. We're seeing it not just from construction activity, but manufacturing as well. Businesses are indeed investing in capital good expenditures. One of the big things that we're going to be looking at is some of those subcomponents within the PMI. So Thomas, there's a few areas that get broken down here. We have prices, which increased 11.5 percentage points last month's report.
Wow.
It increased from 75.6 to 87.1. So that was a pretty significant upward movement. And despite that, we're still seeing orders kind of still starting to flow in. We did see some downward movement in orders, but another one that we're going to be looking at, of course, is going to be backlog of orders, which also had a little bit of a decline because when we're starting to see that manufacturing really build up, we start to see, okay, there's a lot of areas that need to have these goods in hand, but then that backlog starts building up because those new orders can't get processed as fast. We're starting to see some of those backlogs just ever so slightly ease, but keep in mind when we see that downward movement from like 57 to 55 or things like that, that doesn't mean that it's coming down. It just means that it's growing at a little bit of a slower pace there.
We're still making that kind of expansion, but like you said, there's been the supply chain. Let's talk about upstream and downstream.
Yeah.
Like right now, we are dealing with, like you said, this situation where there's almost a mismatch. You're getting either too much upstream or not enough downstream, especially those GDP numbers. But that was a great time to take a vacation because holy cow, like now we have the GDP drop and we have everything else. It feels like there's definitely quite a bit to talk about.
Yeah, definitely a lot to talk about. And one of the things that the main points I've had really still hold true here. So one of the big things was that the biggest and the last stronghold in the economy is going to be the consumer. And our next chart here, we're going to start to dive into some of those areas is because construction spending is going to be a big one. Construction spending for residential, we have it here. In the green line here, we also have our flatbed outbound tender reduction index. Now, there's a big takeaway with this comparison. It's not to be used as a predictor in a sense just because the increase for construction spending can almost be infinite just because it's going to be in dollars. So if you're looking at inflationary pressures, spending like that, that can keep going up, up, and up. Capacity is only is limited in terms of flatbed trailers. And so we're looking at the two. You need to keep that in mind, not to kind of confuse how to interpret the two. But we are still seeing that there is increased construction activity, but that spending can start to outpace overall capacity just because inflationary pressures can continue to keep it up. But when we're looking at overall residential construction spending, residential activity, it is increasing. One of the areas, Thomas, I'm watching closely, multifamily units. It's going to be an area I think is going to be primed for growth as we continue to go throughout March of 2022. But a big thing that not a lot of people are talking about is that there's that big pull forward, I think, in housing starts, housing activities, getting ahead of anticipated increase in mortgage rates. And so a lot of that activity has been pulled forward. Now we're starting to see mortgage rates continue to increase. Interest rates likely going to keep going up. Another big, I think, talking point as we kind of dive into some more of that GDP stuff and what the next quarter might look like. So there's a lot of moving factors here, but definitely going to be watching construction spending closely in the upcoming week as well.
Like we were talking about, especially with the housing starts, for so long, I think there's a situation following the Great Recession where housing was not really putting in enough in the market. So now we're seeing even as mortgage rates are moving up from the Fed's decisions, people are still going to say we need more housing capacity to cover it. So this multi-story, not the single, but with the multi-story situation here, it's almost like people are finally catching up. You see construction in Chattanooga and other large cities now where there's just huge amounts going on in spite of the fact that, like you said, the affordability and the prices are starting to become an issue.
That's a big one, exactly right. And so the other big thing not a lot of people are talking about, a lot of people, or a lot of these purchases, investors, we're looking at institution and investors buying up some of these homes. And so a lot of these are going to be these homeowners' first purchase. Some of these are going to be, hey, this is my investment property, this is my second home or third home, things like that. You're seeing a lot of cash offers being pushed through as well. I know there's a lot of frustration I've heard anecdotally of, hey, I tried to put in an offer, went in above asking, I got beat out by someone that had a cash offer, 5-10% above. So that's going to be another one to put upward pressure, but that upward pressure can only last for so long. And so it's going to be interesting to see how far it persists, especially with a little bit of a pull forward in that late winter, early spring months of really trying to lock in some of those lower mortgage rates. But we have tons more to kind of talk about in our next shipper update, and of course our carrier update that we'll have a little bit later on in the show. But right now, we're going to toss it back over to Sydney Edwards.